CBR Street Gang, this is Almighty. Standing by, over.
The Army Air Forces has announced that a flying disc has been found and is now in the possession of the Army.
Thank you, over. CBR Street Gang, this is Almighty. Standing by, over.
Hello. Let's do a microphone test before we get started with the actual stream here. Let me know if you can hear me across the various streams. We have Twitch, X, and YouTube going right now. And I see there's quite a few that are in the Twitch chat at the moment. If you do want a cleaner stream, please head over to the YouTube stream. So if you're on X especially, you're probably going to see that the stream is fairly low bitrate going out to you. I'm pushing a pretty high bitrate, but their compression algorithm sucks over there. So if you do want to see a much cleaner stream, please head on over to the YouTube channel. You can check my profile on X, and you can see the link to the YouTube channel there. Also, I posted the link directly to this live stream there as well. So if you do want a nice clean stream, I do suggest you head over to YouTube to watch. If you are on Twitch, I suggest the same. Twitch has made some modifications to the way that they do their compression algorithm, and I'm not paying them for high bitrate out. So if you want a cleaner stream, head on over to the YouTube stream. So we're going to get started in just a moment. I see that I have gotten confirmation that people can hear me. Let me just go ahead and wrap up a few things on the back end here and get the music under control. All right, let me just turn the music off on my end here. And let's roll into this. Hello and welcome to Macro Mondays here on Landy's Crypto Corner. I'm your host, Landy, as always. And today is, today's April 29th, 2024. And we have one more daily closure to go before we close out the monthly and the 2-month candle. And this is going to be pretty important because of kind of the areas that Bitcoin is currently playing around in this particular range. Now, you may have seen me playing around with some tools. I am playing some catch up. I have been trading, but as many of you know, I was not streaming or posting any recordings for the majority of the latter half of last week. My son was in surgery, came through just fine, and he is now recovering here at home. So today's going to be a little bit on the shorter side of things, as I do need to go to attend to him and see if he needs anything. But we are going to cover Bitcoin. If there is time, we may take a quick look at the traditional market charts, Dixie and gold, and maybe an altar too. We'll see. We'll see how much time we got here. But I did want to call out a few different things here, just kind of going through a few of the measurement tools here. Since Bitcoin got into this range, we can count the February 28th candle here. We've seen Bitcoin consolidate now for around 61 to 62 bars, likely to be 62 and more, coming into the close of today's daily candle. So, we've got a good 2 months under our belts here in this particular range. And Bitcoin has cooled down a lot of the momentum oscillators here as it has gone into a sideways consolidation, as you can see pretty clearly on the daily chart. When looking at the 2-day, you can also see that Bitcoin did go into from an expansive phase to a compression phase, and then a re-expansion down into downside supports here. So if we throw on our supports here on the 2-day, you can see the monthly, weekly support resistance areas. We have this big monthly zone down here between 61,350 and 58.8. Now that is the closing monthly high structures from October of 2021 and then March of 2021 respectively down there at 58.8. Now that March one is pretty important because not only is it a closing monthly high, but it's also a quarterly closing high as well from 2021. That was the high that was never closed above on a monthly or quarterly time frame. Now, if we want to, well, actually, I take that back. We did get a monthly closure above. We did not get a quarterly closure above because October does come after March, as it turns out. So we did not see another quarterly close above. That's when we saw the double top in 2021, coming into 2022 during our wonderful bear market there. It was all downside from there, right? Now, I'm seeing a lot of really crazy hyperbolic takes that like this is it, this is the triple top, and Bitcoin's it's over, the bull run's done, and I do not fall in that camp. When looking at the longer term timeframes, this is a sideways macro compression on some of the higher term timeframes here below. Like the weekly, even the weekly is just a pullback as it stands right now. We have not broken any major structure to the downside. This is a nice consolidation. Now, it's more likely that this consolidation resolves to the upside, but that's not a 100% chance. It is conditional. So let's go ahead and take a look at the 3-day. We do have a nice compression now showing on the 3-day. We had the beautiful expansion up to make new all-time highs prior to the halving, which everybody's like, it's the same cycle all the time in Bitcoin. Really? When was the last time you saw a new all-time high before the halving? And then the justifications for it are just kind of crazy. Well, it's traditional market liquidity and this and that. And it's like, okay, really? Well, prior to Bitcoin making a new all-time high, before the halving, which is something that we talked about and we're in favor of. We were looking at that here as very likely that Bitcoin was going to make a new all-time high before the halving, and it did. Now it's a sideways consolidation, and everyone's still sticking to their same guns of this, in my opinion, crazy mapping of traditional market cycle theory onto Bitcoin cycle theory, which you have two different clocks. Yes, they run together and they're similar, but they are very, very different in the mechanisms that drive them. Bitcoin is going to black hole fiat over time. So, it is going to change structure. It is subject to the forces within traditional markets, obviously, because it is sucking up fiat like a black hole, and it will quickly do this as well. I want to address another thing as we look at this macro compression on the 3-day and even the 4-day. You can see starting to go into a compressive phase now. We had the beautiful expansion, Bitcoin kind of trading below that basis band. Now, this is something I'm going to talk about in just a moment, but I saw a lot of really crazy takes about the fact that there's a 100% cut in using or rehypothecating Bitcoin basically for the market side of things, for the actual DTCC stuff. So that has nothing to do with you guys. If you want to take out loans on your portfolio or against your portfolio holdings for ETFs and stuff like that, if you do hold the Bitcoin ETF, I do suggest you hold spot. But if you are holding a Bitcoin ETF, yes, you can absolutely take a loan against your portfolio. That does not change. This is all about leverage on the back end. Please do not confuse the two. No, it is not a death sentence for the ETFs or Bitcoin or anything like that, or they don't see it as an asset or all these crazy, crazy, silly takes. Don't worry about it. It has nothing to do with you on the user side of things. If you are retail and you are buying through your brokerage and you hold Bitcoin ETFs, they're going to give you a line of credit based on that if you want to borrow against your portfolio holdings. That is not something I suggest you do, by the way. I think that you should, just if you're going to hold any kind of ETFs for Bitcoin, you use those as a cash mechanism to buy more actual Bitcoin and self-custody that Bitcoin. So if you're just looking to get funds up basically over time, and or it is part of some kind of a tax deferred or tax exempt portfolio holdings, set of holdings that you have. So that is not financial advice. Of course, do your own research, talk to your financial people in your life that manage those particular assets for you if you have those types of accounts. So now we can see on the 4-day, we do have a closure today coming in for Bitcoin. Now there's not much to be made of in this range because Bitcoin is in between support and resistance at the moment. Let's go ahead and get the arrow up on the screen here. If it does close below the basis, it is more biased to head down into this monthly zone again in between October of 2021 and March of 2021. We're likely to see the lower first on the 4-day head up more towards that March close by 58.8. It's currently coming in at 56,700 to 800. Yes, that's in the meme pullback zone between 20 and 22%. No, I'm not. That's not the first place that I look. It's all conditional. Bitcoin would have to break down below 58.8 on at least a daily and or swing down there on the lower term timeframes to hit something like that. And then we revisit it. We'll talk about that in just a moment as well. Overhead 65,000 and is the main area that Bitcoin needs to reclaim, and then of course get it back above this wick at around 67 2 to 3, and then we'd be looking at the highs and higher again, likely, especially up around $69 to $70,000. If we can see Bitcoin start trading up above there and the upper first, then we're looking at the highs and higher. Probably $75 to $78,000 by that upper second. Now that upper second is not currently in that area, and it's likely to compress some more. But we're going to be looking at some of those longer term looks in just a moment. We can see that the 5-day, which let's see, this is going to be closing with today's 4-day candle as well. I believe we have a 2-day candle. Let's just double check on that. Yeah, 2-day, 4-day, no 3-day today, right? Oh no, we had a 2-day, 3-day, 4-day, 5-day. This is a big, big day. Okay. Now Bitcoin on the 5-day, you can see that the basis band is right there in that support area, coming in at just under $60,000 at 59,750, 59,650, which is right around this prior wick low. Now this is not the lowest wick low. We do have a wick low in this area from the move up, but since Bitcoin has put in a 5-day high now, we can see that that is the lowest low of this particular move. So, if Bitcoin does revisit it and break down from it, then I would be looking at that 58.8 as a likely candidate to get tagged, possibly a swing under for the meme pullback, 20 to 22%, which 20% puts it at 58.8, by the way. 22% would be a deviation below the support. And then we look for either things to remain below the support, in which case we would target much further down, and or come right back into support. Nice little bear trap, and then take off to the upside. In this case, the weekly also painting a very similar picture. If things did break down, as Bitcoin is trading below the upper first standard deviation on the weekly here, if things did trade down below that 58.8 or the bottom side of this monthly quarterly support here from March of 2021, then we would be looking at that basis band as being a likely candidate. That's coming in at 55,700. Now, of course, if Bitcoin did start trading down below there, then we have to entertain possibilities of Bitcoin retesting this breakout area. You saw the 2-week pause here, 3rd week it broke out to make a new all-time high. But this is historical resistance that was tested as support as well, but not on the top side of it. So $53,000 is the September of 2021 weekly swing high. And then we have the August and December of 2021 closing highs. And in this case, that's coming in at 51.8 to 50,800. You could take $50,000 as well, even that was many exchanges closes on the weekends in this case. Now, that's from September through to August, August to September, and then December of 2021. We saw this as initial resistance here in February of 2024, and then as support. So if Bitcoin did start breaking down and closing, especially like a weekly time frame below 58.8, then I would be entertaining the possibility of Bitcoin coming down to the mid 50s and possibly retesting the low 50s around those supports as well. Of course, that would not be the meme pullback, and the only way that the meme pullback it would be in play is if Bitcoin deviated something like so. So if Bitcoin did come down to try for that meme pullback, and it is a meme because it is just something that is observed as being pretty consistent lately. We've already seen a 19%, almost 20% pullback. 20% puts us at that support on the quarterly monthly. And then we've got 22%, which is right around 57.5. And, that's right in some areas of some major supports. Anyway, for the actual volatility bands or the Bollinger Bands in this case. But if it did go for the further the meme pullback, especially getting any kind of daily closes below that quarterly there, and then more importantly, any daily closes below this quarterly at 58.8 that fail to come back in and reclaim and especially get back above 61,350, then I would be eventually looking down to this area here at that $53,000 to $50,000 zone. Now, that would not be abnormal to see Bitcoin go test that, especially if it did break down from a major monthly and quarterly support. That top side would be around 28%, bottom side would be somewhere around 30%. That'd be a pretty big move down, pretty big move even from Bitcoin's current position. It's trading at, it'd be trading down around 15%, possibly another 20%. And in my opinion, if and only if it met the condition of breaking down from 58.8 on a daily time frame and failed to recover this zone and reclaim 61,350. Now, whenever you're hearing me or any others talking about pretty bearish targets, that's because currently, Bitcoin is playing on the edge, but the counter trade to that is that Bitcoin has not broken down, right? It is still consolidating in a beautiful range right now. And is it likely to keep testing to the downside? We'll see, what the rest of today brings. I'm going to show you some counterpoints in some of the lower term timeframes. If Bitcoin can get back above certain areas, that we're likely looking at further upside coming into, this week into the beginning of May, maybe even extending through the month of May. But in this case, I'm seeing a lot of bearishness on the timeline, and realistically, is Bitcoin doing anything too crazy outside of consolidation? No. Are oscillators turning against it? Yeah, because it's a consolidation. That's normal. Is the overall market structure bullish or bearish? I mean, let's go ahead and just pull this out to the monthly chart, and you tell me, is this bullish or bearish? And this is where, you're going to see a lot of people go, well, look, it's a red candle. It's obviously bearish. But in reality, this move up is higher highs, higher lows right now. If it puts in a high, even if it puts in a high on the monthly, is that inherently bearish? Absolutely not. In fact, Bitcoin can come all the way back down to, you guessed it, somewhere around the $50,000 range. Hold on one second while I actually click the right buttons here. It can come all the way down to the upper first, which is currently hanging out around 48,650 or so. This is going to update at the end of this monthly close, right? So we've got 1 day and 6 hours. So it's going to close at the end of tomorrow's candle. We will, of course, here in the United States, we're going to see that candle close open here at around 5 p.m. Pacific Standard Time or 8 p.m. Eastern Standard Time. And in this case, this is likely going to update right into, guess where? That weekly monthly zone, right around $50,000 to $53,000. That is where I would expect the upper first to end up. And the upper first is typically your trend support, any kind of expansive move like this. If we did see it wick down below, that's fine too. But in this case, I'm looking at this likely updating to somewhere, like I said, in the $50,000 to $53,000 area. So that does mean that if Bitcoin does close below the upper second standard deviation, this becomes a more viable target from a volatility standpoint. But again, it has to break down from its current range. If it does not meet the conditions of a breakdown from its current range, lows, and then of course take out that historical, whoa, that was a misclick there. Sorry about that. But if it doesn't take it out to the downside, then I can't look in those areas. It has to meet conditions. It's all conditional. That's the way the order books work anyway. So, this is nothing too crazy. And in this case, it would have to break down from that support. We're likely looking at the upper first on the monthly coming into this zone. Now, the other thing that I'm seeing a lot of is like, well, you've got a regular Stoke and a Stoke RSI and this oscillator and that oscillator, and they're all pointed down and their pivots are really high up there. And the pivot's at the top of the range, basically at the previous highs above $69,000, right? It's right around $72,000. This might actually update to be a little bit higher than that. We have an initial cross down, so I'm looking at this number likely coming down. I'm not really sure. We have green DMI. We have strengthening trend. This is nothing too crazy. I would expect a bullish reset on this within the overbought zone. And we do have a 2-month coming up in terms of closures. We have the pivot all the way down at 31,400 or so. This is going to update, likely going to be a bit further up. We really haven't seen a full-on extension of this expansive move kick off to the upside for the 2-month in this case. We need to see another closure above the upper second standard deviation in this case, but we do see the pinch that was coming in between the November to January candles for the 2 month here, and we back above the upper second standard deviation, which is right around 67 250. We're probably going to see this update to around 69 $70,000, maybe a little bit more, likely just above or north of that $69,000 area, which was the prior cycle all-time high. And that would be indicative of ever so slight expansion of the Bollinger Bands. We can see that it is in an expansive posture as long as it is trading above this upper first standard deviation. Where's that coming in, by the way? Oh, okay, that's coming in right at 52,633, right there in some of the very important areas that I've already discussed with you guys on the lower term time frames. And of course, that is a weekly support zone that we have already previously seen, that put in highs in 2021 that was retested as resistance and support here in 2024, as I noted earlier. For those of you that are heading in here a little bit later, after I'm kind of through the bulk of this analysis, this is a macro stream. I will get into some of the lower term time frame stuff, but I also want to mention, if you want a nice clean stream, I do suggest you watch the YouTube version. I want to keep telling you that because the X stream just does not look good. And I'm pushing pretty high bit rate out to them. I have a fiber optic connection. I don't know. Their algorithm is just chewing the streams up pretty hardcore here. Let's go ahead and look at the quarterly. We have quite a bit of time on this still, but we will be looking at this closing at the end of next month. So, it is going to be important in, coming into, having a month left, through May into June. We do want to be aware of where things are. And I want to point this out again. I know it's getting a little rote, but look at where the upper first is. And of course, this area that I keep talking about to the downside, $50,000 to $53,000, those weeklies that Bitcoin consolidated at in February before making the new all-time high, they're only confluent areas to be looking if Bitcoin meets the conditions of a breakdown below 58.8 and finds 61,350 and 58.8 as resistance. That's it. Otherwise, we're probably looking at, either the lows already being in or the meme pullback, run those lows again. But in this case, we can see the upper first on the quarterly is right there at right around $50,000. It's at 49,930. That is a likely candidate of an area to get hit if Bitcoin did break down from its current structuring, especially on an expansive move. So we're going to revisit that to tie this together in just a moment. But in this case, when we look at the 2-day, or let's say the 3-day, you can see the beautiful compression here. So if we did see closures below on the 3-day, this let's go ahead and do this. Let's throw our chart on here. You can see that the 3-day lower second standard deviation is right there at the monthly. That's the October of 2021 monthly area that has been holding as support on a close, by the way. That's our last 3-candle low structure. So we have our red, green that actually put in the close, but it did not pass the wick high. We needed $67,000 to be passed and closed above to complete that low. So it is called a low on most indicators. It is a 3-candle low on a swing and a close, but it did not meet the criteria for their upside, which just so happens to be the basis band here around $66,900 to $67,000. And in this case, the lower second standard deviation, if we did see that area close below, it's coming in around 61,350 right there at the October monthly. If it did close below there, we would be looking at expansion, but right into support. So it would only get further expansion or continuation of that expansion if it breaks down below the wick lows, which is basically 59 to 59 to 58.8, right? If it started to close below there, while, of course, it would be meeting the criteria of closing below the lower second, we would be looking at expansion down. Now, if it found this area as resistance, should it do that, then we would definitely be looking at that $53,000 to $50,000. And you can see how those higher term timeframes would line up with a nice expansion down into retest those supports. Now, on the other side of that, if Bitcoin can regain on the 3-day specifically, this is the setup that I want to kind of drill into your heads here, because it is going to be closing this current 3-day. We're probably going to see a little bit more compression, and or we're going to see the Bollinger Bands kind of straighten out a little bit, and we're going to have a bit of a range play. So closes below the lower second that take out the downside wicks and break down from the support at 58.8, we would be looking at further expansion to the downside. Otherwise, it would just be initial expansion into an area of support. Now, on the other side of that, if Bitcoin can regain the lower first to this $65,000 April of 2021 monthly swing high, that was the first all-time high, real actual swing high that was put in a closing high structure that was put in there. That was the March quarterly and monthly there. But in this case, if Bitcoin can regain $65,000, where we look in $67,000, and specifically we need to see this wick high on the 3-day taken out here at 67,272, 67,203 basically. If we saw closure above there, then we're looking right back to the upper first and the $69,000 prior cycle all-time high. So you're basically looking $69,000 to $70,000, and then above there, we're looking at the highs and higher, likely by that upper second standard deviation, which is coming in right now at 72,500. Of course, if we saw closures above the upper second standard deviation, we would see expansion on the 3-day time frame. But we would also need to see a close above the upper second that closes above the current all-time high at 73,835. Then we would see expansion kick off to the upside, and we'd be targeting somewhere around the 75 to 78, 78 to 80, and then the mid to low 80s. And then we'll reevaluate from there, obviously, for the upper half of the 80s to $90,000 and beyond. In this case, this is actually a very nice setup. And when everybody's super bearish on it and it has not breached down below supports, we tend to, this is anecdotal, this is not technical analysis, but this is just me giving you a little bit of advice for reading the room, so to speak. When Bitcoin is holding up at supports, and I'll give you another example. This was back here when Bitcoin was holding the supports here. This, if you look left, were the highs of the low side structures here by the macro low at around $25,000. Give or take a couple $100 to either side. We had a nice high side structure put in here, two big highs that were put in on high volume, no less. And then we saw, Bitcoin approach 31.8, which what a beautiful call that was. Twice rejected that. That was the breakdown candles from the bear market. That was the breakdown monthly close open. Found that as resistance, and where did it find as support? Right around the upper $24,000 to $25,000 region. And it looked, everything was saying this is done. It's over. It's going to go back. It's going to retest lower, $20,000, maybe even retest down to 17.5 to 18,000. But as I was cautioning people at the time, it's like, look, the support isn't broken. So if it doesn't meet conditions, yes, you can have those targets on the board, just like we're talking about possibility of 50 to 53. Maybe the meme pullback there at, $56,000 to $58,000, 20% is the meme pullback. And that's just the bottom side of the current support, which is at 58.8, like bang on 58.8. So, could it swing down there and possibly hit that? Sure. Yeah. And if it does not break down and it holds up, it's probably going to look much like this. Looks very bearish until it's not, right? This turned around on the 3-day, had nice expansion to the downside, right? And then it started to work its way out and expanded or compressed right back into its current, the aggregate middle portion of this, or the mean portion of this range here. Saw a nice compression, higher load its way out of there off of the basis band, got nice expansion to the upside. Of course, we had that beautiful monthly wick down to 38,500. After expansion, boom, hit the monthly, and then nice compression as it moved back to the basis, and then expansion right back up. So, I'm not very concerned about this. In fact, I would like to see this hit the monthly again. And then, if it can regain that basis, we're likely looking at, around 67,000, 67,200. We're likely looking at this running the highs and highs and resolving itself to the upside here. And that the longer that it takes for the bears to push things down, the more likely it is that the bulls are going to take over. I mean, the bears really had a chance a couple of times to push things through this support, but it is a major area. So you are seeing it picked up, and I'm not surprised. Another thing that you're going to see is like, wow, the volume, it's dying. Bitcoin's dead. Look at all the volume. It's gone. Oh no. This is indicative of just about any kind of a compression to expansion that you're ever going to see. All right. So you see the falling volume. You see that there is compression on some of these time frames. We'll use the 3-day because it's just a perfect example. We see the compression on the bands, and then visually you see the falling off of volume, right? And this is either going to resolve in one of two ways. It's either going to resolve to the downside, in which case you're going to see that spike in volume. If it breaks down from support, you're probably going to see big volume come in. And even if it just spikes down to the low side of the range, you're probably going to see significant volume. But realistically, it's going to be breaking out of the top side of this consolidation is where you're going to see the big volume bars come in. And likely, you'll see expansion, of course, but you'll see that volume, continue to grow. Big volume here, come back down, and then big volume on the move up. Of course, this marked the actual, the candle right here that was one of the bigger volume candles is kind of marking the aggregate median of the range here. We can get a little bit of a gauge for that as well when looking at the local range compression. We can take a if JR's here, he'll enjoy this. This is one of his favorites, the fixed range volume utility, and I'll just take the top side of this candle here just to grab the majority of this range here. You can see that Bitcoin on the daily is hanging out between the value area low or volume area low, if you like. Some people refer to it as volume area. That is also the daily lower first standard deviation of the Bollinger Bands. And when looking at, we can get rid of volume, as I think that's pretty easy to understand. Compression falling off in volume is just a consolidation period. And in this case, we can see that, any closures below this probably going to go test the lower second standard deviation. And that is the lower first standard deviation. If we see it close below there today, then it is more likely that we'll see it, try to test down further if it takes out today's low, which is coming in around 61,750, 61.8. Then we would be looking somewhere around the. That's likely where we're going to see the daily basis band update to if Bitcoin closes anywhere here or lower. And that's currently at around 64,900, just around $65,000 for the daily basis band. Now, if Bitcoin does take that area out, it needs to do some work. It's got to come up here and take out, oh wait, guess what? The upper first standard deviation that is lining up with the point of control. This is the highest volume area traded in this particular range. And also, what does it got to do? It's got to take out 62, 2 to 3. If it can recover above there on a daily, then we're looking right back to the upper second, initially somewhere around $69,000 to $70,000. And then any areas above there, we would see it run the highs, and we would need to see the highs and higher. We would need to see the highs break and closed above on the daily to see those highs broken, of course, because that's what I just said, and then higher to that $75,000 to $78,000 region. Holy wow, I just had a whole bunch of chat just pop up on my screen all at the same time. That was kind of freaky. Anyway, this is, it's always bearish before it turns bullish. So be careful if you're really bearish. If you're really bearish, you want to see the confirmation of expansion to the downside through the support. Otherwise, you're probably, even if you're right on direction, let's say if you are super bearish about this consolidation, even if you're right on direction, you're probably going to get taken out before you get to take advantage of it if you aren't positioned from the top of the range already. Now, there's some of us that are or are on this particular lower high here on the daily. And that of course, is that 67, 2 to 3. Now, let's go ahead and take a look at a few other things. If Bitcoin can close back above 63,118 today, we would see an initial cross back up on momentum. This is regular Stoke. This is not a Stoke RSI. This is measuring close over close price momentum, not the velocity of RSI. This is also running a 6.3. This is running a 6.3 14 255 look back. So that is a 6K 3D 14 period, and then a 255 day look back, or 255 bar look back. Sorry, not day, because it is time frame dependent. It's only the day because it is on the daily right now. If you go to the lower term time frames, it will be 255 bars for that time frame. But in this case, nothing too crazy about this. This could easily be taken out to the upside, and then Bitcoin could march up. Of course, any closes above that 64,300 that we just looked at, likely to fulfill that. If we look at the 12-hour, though, this is going to be something that I'm watching, and I talk to you guys a lot about the 12-hour as a leading indicator for the daily. So please, please, please heed what I had mentioned back over here. Let's just revisit. I had mentioned, look at that 12-hour, use that to kind of inform what the daily was, and right around that 12-hour Stoke turn on the lows, we saw the spike into the lower second standard deviation, but we had already seen a low put in on the 12-hour. And once that low was put in, yes, we did get a beautiful run of it right back there to swing and actually clean out those lows. So if your stops were not, if your stop was right at the low, you got taken out from this move. But if you were, keeping a range low stop, which is what you should be doing in a range, then you were particularly fine and maybe even took advantage of that like some of us here did. Now, we saw that the Stoke turned. We had a nice a low set already, a 3-candle low set, nice run of that. That was a fake out to the downside. Bears got wrecked on the other side as Bitcoin went to march on to that 67.2 to 3 area. Now, we're right back in this zone, and we're in higher low territory, no less. So we do have a higher high and the potential for higher lows down here. Now, of course, from the swing chart, you have a downtrend on the 12-hour for the swing, maybe even a lower high here. So you can, even if you want to stretch your candles out, you can be more aggressive with this. If Bitcoin does start to set any kind of a 3-candle low on the 12-hour, then I would tell you to go ahead and look at this high, which just so happens to be that 64,333. So that's your 64,300 area. If Bitcoin can start closing back above there on the 12-hour and then above the basis, which is just slightly above there at 64,500, well, guess what? That's going to look pretty damn good. One of the other things that I want you to note is that 63.8 has been an area of resistance, and you might be wondering why. If you don't recall why this area has been a big area of resistance, you can see that it's this close open. This was a higher low close before going up to retest the top side of the highs here. And then, of course, we saw the consolidation structure, and then it's shifted a little bit bearish here on the daily. Again, it's still a consolidation structure. So yes, it is a downtrending structure. Yes, it is on the more bearish side in terms of trend. And even this local structure on the 12-hour is bearish as well. But it would not take much for the bulls to take out this swing high. And of course, we have a 3-candle close high, and it's starting to really compress into this local zone on the 12-hour. So if we were to see basically a 3-candle low structure be taken out right now, that you're looking above 63,300, 63,350. You're looking at the Stoke shift. You're looking at possibilities of a run to actually break that area at 64,300 to 64.5. Start seeing that. 65 is likely in the cards. If it can break above 65, then you can look to that $67,000 area up here by the upper second standard deviation on the 12-hour. And we would likely see bullish diversions pop on this as well whenever this puts in a low. We have a lower low on price action, higher low on RSI, and that's only going to be relevant if this sets a low here. And in this case, you would see a bull div populate between these 2 points from the 13th to the 28th here. So that is going to be what I'm watching in particular over the course of today's daily close into tomorrow's candle. And, that's going to be indicative of how does it close on the monthly as well. And that is something that I'm going to be watching very closely. We can see the 8-hour has already turned to the upside here, but 62,750 would turn it right back down. We can see that it's flirting with that 8-hour pivot at the moment. Not much to be made of that as it currently stands. 62,920 would be the 6 hour that would turn it back up. You can see there's more and more potential building for bullish divergence here, not only regular bull divs, but continuation drives. Fairly weak, though. It is weak looking at the moment, but again, it just opened. You can observe that you might end up with a inverted head and shoulders on momentum. Does it mean that much? No, it's not as powerful as it would be on any kind of actual close open structure, but we can also see that Bitcoin on the 4 hour riding a bit of a trend line here. Well, it might have even broken down from it at this point. 62,850. It's just getting really tight with the pivots, so that it can turn each and every way. That's why I'd be looking at the 12 hour. That's going to tell you if things are going to get continuation to the downside. We did see one drive of bullish divergence. There's actually more here, but this indicator isn't pulling them in from that longer term because this was an uptrend to a downtrend. So we have a new trend. You want to see more bullish divergence developing in this trend, but more bullish divergence of the regular bullish divergence type would require it to continue to either make equal lows or lower lows in this case. So be aware of that. But closes above basically $62,850 to $63,000 would turn this back to the upside. This is rejecting around the basis band of the Bollinger Bands at the moment. And that's still going to remain bearish. So at minimum, we can see the low is set. This is a little bit of a back test, but at minimum, it's got to break some of the same areas that the 12 hour does at 64, 2 to 300 or so. Then we would be looking further up. Otherwise, it's likely to either sit around this area and or test lower into that monthly zone and its current low side structure. When looking at something like an hourly, you can see that the hourly is likely getting a bearish reset of momentum here pretty soon if it doesn't push through. Currently, 62,132 is not bad. It's trading away from its pivot there, but it's got to do a little bit more. It's got to at least come down and higher low its way out of here on the hourly and hold that. You'd want to see it hold the basis to lower first in this case, and that's coming in around 62,630 to 62,300 or so. So 62,2 to 3. You want to see that area hold on the hourly. And then, of course, it's got to take out its current high coming in at around 63,325 or so. Or 63,235. Sorry, got a little mixed up there. But, other than that, looks pretty good. Not too worried about it. Let me go ahead and take a look in the chat here before evaluating whether or not we're going to continue on to some of the traditional market analysis or not. So let's see. On YouTube, I do have some chat going over here. Hi, Bobby. Hi, Cheryl. Hi, Baba. And others. I see there's others here, just not chatting at the moment. Yeah, like and subscribe. That's all good. You can do that. That does help the channel. It's all free information. I don't charge for anything. So if you like it and you wanna hang out, go ahead, like, subscribe, follow all the good social media stuff. I see Don is here as well. Hi, Don. All right. So Cheryl says she can't find a good stoke. Well, I've mentioned probably a couple of times I've mentioned some of the paid stokes. You don't need to pay for a stoke. But there is a free stoke with pivots, and it's called the BA reverse stoke panel, I believe it's called. Let's look. BA reverse stoke panel. Yeah. They've changed it a little bit. It's called the BA. Now it's just called the reverse stoke. By BA Gift. This is on panel. It's by Trader Halali. I'm sorry, I butchered their name. But you can use this. It's free. It tells you the pivot. You can also double click it down here and you can customize things. So this is running a 14K 3D because the way that they have their settings done in the Pine script code. The 6 smooth, that's going to come out with the same one, right? So this is the one I've shown you guys many, many times. You can also turn on overbought and oversold. These are not really going to be that relevant. You can see that I turned it on and I messed it all up. But, you can customize this thing. Mine looks obviously different because I customized it. But yeah, you can get a free stoke like this. You don't need to pay for a stoke. The only reason that I pay for that one stoke is because I like to support the developers. You can see a nice little momentum reset on the hourly here. So if it is going to higher low its way out of here, then this is its opportunity coming into the latter half of the daily here. But you can see overbought, it's telling you 79. Oversold is telling you that that's just not relevant. I'm actually a little bit. I'm going to look into some of the code for that. But yeah, we don't need the overbought, oversold. So, and then it can tell it, you can plot the line, all that kind of stuff. But I like to take these and make them a little bit easier to see, um, just so that it's visually a little bit more. Um, for the visuals, it stands out a little bit more on my phone. If those lines are a little bit thicker, and then I like to change the background to be a little bit different color. Just whatever you want. It's easy. There's plenty of other options in here that you can check around with and check out rather, and mess around with. I was avoiding saying the F word there. So, but yes, you can mess around with that if you like. The particular stoke that I have on is not really something you need, right? The stoke that I have here is the KVDB Advanced Stoke. We just got a nice update on that. 62,500's the pivot now. You know what? That stoke that I just looked at and just put on did not have the right pivot number. I wonder if that's a bug. Let me look at that actually. It's, let me actually look at this again. Okay, so this is bugged. This is not interesting. So 6/3/14 KD estimation forecast. Multi-time frame is off. Is this running multi-time frame? It is. Okay. There we go. Because it was running multi-time frame, it was incorrect. So it is correct. You have to turn off multi-time frame if you're going to use this particular stoke, so that it's relevant to the time frame you're looking at. So in this case, multi-time frame was set to a daily, which interestingly enough, the daily wasn't even correct when it was on multi-time frame. So there's something wrong with that. Maybe they'll bug fix that, but I don't use it anyway. Just make sure you turn it off. It's right under the smooth function. Unclick multi-time frame so that you can get the actual proper time frame that's relevant to what you have selected on your chart. But yeah. Now we got a 4-hour closure coming in this last hourly candle before the last 4-hour closure of the daily will come in after this next hour. So, do I have any other questions before we see if we're going to move on here? Fibs? Yeah, I can pull some fibs for you. If you want to take the high to low, you're going to do this move. I wouldn't take the wick over here. I don't think it's as relevant. And you can see that, Bitcoin to get back above the 50% here would be right around 66,300. And you need to see it closing back above the 618 at $68,000. Now, of course, there's overhead resistance right there. And then my criteria would be taking out this last lower high at 67,223. Then it's pretty much confirmed it's going to, at minimum, test, $68,000 to $70,000, right around the prior cycle high at $69,000. And then if it starts to get above there, then we're looking at, that's that upper second standard deviation here to that 786, right? So then above there, we're looking at the $72,000 region, which is right around our high side structure. And then from there, the highs and higher. And to really pull that back in, I mean, above the highs and higher, I'm looking $75 to $78,000 up here at the 1272, and that would be a zone between 75 and 78 to the 1272. Above the 1272 at 78, I'd be targeting an area between the 1272 and the 1414, which is 78 to 80. Then, of course, any closures above the 1414 at 80, and I'd be looking somewhere in the mid to low $80,000 region. We can refine, if and when price gets there, if it gets there quicker. Of course, I do think eventually it will get there no matter what, but we'll just refine that look on that zone somewhere around the 1618, which is coming in the mid 80s, and then of course we've got the upper 80s to $90,000 above there as an area of interest at the 1786 at right around 87,500 to the 1888, coming in just shy of 90. So basically mid to upper 80s coming into the $90,000 region. And then of course above there we've got 100Ks. Everybody's looking at 100K. That's the 2414 up there, and of course it has confluence across many time frames with many different fib poles, with many different areas of interest on volatility bands and the whole nine. I'm not really enamored with the idea that many people have of like that's going to be sell in May and walk away. Anybody who's looked at Mays in election years is going to say like, okay, well, that's a little unlikely. It's not always the case, but if we were to look at Mays for Bitcoin during election years, and I got to go to crypto and look at this particular chart here. This would be our index, and just taking election year Mays, they've been green all the way through, and in fact, they've proceeded pretty giant runs. We did have a nice May here in 2016. It did come back and retest the upper first, as I mentioned. That's a big area to pay attention to coming into May anyway. In 2020, nice green May, and then we did get a nice red candle and then a pump up, a little bit of a swing high, and then off to the races again. We're seeing a nice red candle again. Nothing to be afraid of in this area right now. So somebody says going down. Earth Angel Extreme Grace says going down. Going down where? Where are we going? Are we going down down to Australia? For me, that would be the down under. But yeah, I mean, if you're talking about price, I mean, go back to listen to the beginning of the stream where I give you my take or analysis on the conditions that need to be met for further downside versus the conditions that need to be met for further upside. Pretty straightforward. It's not that difficult. But yeah, amazing election years. It's not that big of a deal. It's not as big of a deal. And in fact, I think Crown went and mapped out all the Mays. I saw a post from him on X. It's most Mays are actually, despite the real big bad Mays in the bear markets, most Mays are generally in aggregate they're about even or green, and the pullbacks weren't too crazy, but it's become a meme. I know it was a big crypto face meme, and then he got other people on board with it, and the May that he talked about was correct, but we also knew that it was not this big conspiracy theory of it was the quarterly, everything, all momentum oscillators, all indicators were this is overheated. We were also hitting the upper second standard deviation on the quarterly and all this other stuff. It was a retest. So it wasn't anything too crazy. You got March, April, May. We came back up and even rallied past it. I mean, so it wasn't even it was a nice corrective phase in what I believe to be a macro sideways and up consolidation. But I mean, I'm in the QA portion, Earth Angel. I don't know what you mean by gotcha, but yeah, maybe because I responded. And if you want to know my actual thoughts on it, I did lay those out pretty simply in the beginning of the stream. I'm not, and I don't care which direction things go, just so everyone understands. Like, I am bullish on Bitcoin longer term, but I'm also the same kind of, if Bitcoin takes off to the upside sooner rather than later, I think that we are in a, we're going to see everyone, oh, the rally is going to keep going into 2025. And now everybody's starting to come on board with something we've talked about for quite a long time, which is I think Bitcoin's going to have a quick top. Maybe even really push up in a very aggressive way relative to the timeframes that we've been looking at on the daily, weekly charts. But it's going to have a quick top and then a longer form consolidation that everyone's going to call. This is going to be the extreme bear market, 5 years, blah 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 blah. And I don't see it that way, especially when looking at the quarterly and 6 months. So I think that we could go through a very long corrective phase relative to what people would expect within a bull market, not a bear market. It would be a bearish phase within the bullish macro structure, and really form some nice higher low structure on the monthly and quarterly. So, and I think that would surprise a lot of people, and it would completely fuck with their cycle theory, trying to map on traditional markets onto their Bitcoin cycle theory. And of course, they have valid arguments for cycle theory, and I think they're missing one key component, and that is that Bitcoin is black holing fiat, not the other way around. So that is something that you need to be aware of as I've made the comparisons of the cycle theory in traditional markets, which is where I'm from, in my learning, understanding, trading, and training. I do not think that you can directly correlate or map on that cycle theory onto Bitcoin. Is it going to be subject to the forces of that liquidity? Sure. And there's a lot of cycle theory guys that I'm a big fan of. The Pizzinos, Rickus, and I think even Credible Crypto over there on X is also a cycle theory guy. I don't know how much he is cycle theory versus like he's just stuck to his charts with Elliott Wave, which he's very, very good at. I do think that everyone could benefit from some volatility analysis, though. As you know, I am a volatility trader, and that's one of the reasons why we have such high accuracy here, is because we are incorporating that volatility metric, which many pay attention to but don't incorporate into their analysis. They use other methods to try and define volatility instead of just looking at the actual volatility metrics themselves. So go ahead, Bobby. You have something for me to look at. You let me know what you want me to look at, buddy. And I will take a look at it. For now, let's go ahead and take a look at taker buy sell ratio. We haven't seen too much change in this regard. We're seeing basically this neutral read. Now, when Bitcoin was kind of plumbing the lows there below $62,000, this did get below the 8 read here. So that is something that I can't look at Discord, buddy. Not right now. At least I don't think I can right from here. So nothing too crazy there. We did see a little bit of a washout in terms of open interest here, but it's just about hanging out in the level that it's been at in this range. It's actually a little bit elevated, but nothing too crazy. It's not like it lost spot markup or anything. I think spot is still about, it was trading above, but I think it's about equal with derivatives. We're at 62,700. Yeah, so it's got a little bit of a markup over perps, and that's what you want to see, but it's nothing too crazy. So I'm not too concerned about anything within this local range just yet, unless we see things really start to break down. Cheryl says, "How's your son?" He's doing good. At the beginning of the stream, I had mentioned that he had some surgery. He's doing well. He's home, recovering, and then I'm going to be getting going here pretty soon to go and tend to him. Sent the weekly chart of Bitcoin, which takes a look at the weekly closes below the upper first after riding on it since the 2021 top. Well, when you're looking at the weeklies and you're looking at closes below, you're usually looking at minimum a pullback to the basis, right? But here's the thing. We're in this phase. We just had the halving, right? So this is where you need to dive into context, right? So we just had the halving. Say we lose we lose the weeklies. We've been away from the weekly upper first for a little while during this expansive phase, right? And we have seen it come back. Now it's not the same angle of the bands, not the same compression or expansion on them, but we see that it came back, lost it, hit the basis, up and away. We see that when it lost it in the bull market in 2021, it did retest and then come back down, retest and found the upper first as resistance, right? So it rode on it, lost it on the close open, retested as support, and then lost the basis, and then came all the way down to the lower second. We see that after it regained it and got expansion and then lost it, what did it do? It came down to the basis, even spiked into the lower first, and then began its downtrend for the bear market after coming up and trying to retest the basis and even towards the upper first here. That is all, it's all contextual, right? So if you're going to if you're going to take a look at this, one, I do not think that $33,000 is in the cards. Two, more likely you'd be looking at 50, and if 50 breaks down, you're looking at $45,500 and $47,000 respectively. That is just a fact, right? That is support and resistance related. If we were going to go take a look at this on the Coinbase chart, for instance, you're looking at $53,000 if the base is broken down from, and let's say it doesn't break down immediately. You're looking at this becoming relevant below the basis down to the lower first. I mean, that's just how volatility levels of interest work. But then, where's this coming into? 47 to 45.5, right? That's basically where the weekly is. And I don't think we'd be looking at a giant candle down unless we see a breakdown below 58.8 on the weekly close, especially. Then we'd be looking at, the meme pullback, basically. This is basically $56,000 to $58,000 at the weekly basis. But what you got to understand is the context of where things are on the monthly and 2-month and quarterly. When we saw the weeklies lost in those areas, what we saw is excuse me, the weeklies were lost all at the same time as the upper second. Could you say that this is very much like that? Maybe, the case can be made. But this is not, look, this was, even back then, what was I talking about? We lost the monthlies, came down and made higher low structure. I mean, unless it had taken out that wick low at like $9,000, $10,000, it wasn't, this was going to make a higher low and more likely retest the highs, right? We talked about this during the daily Wyckoff reaccumulation back then. But same deal here, right? Bitcoin has room all the way to where? $50,000 by the upper first. It can swing down below in a wick. And where would that likely come in? It would likely come in right around the support resistance areas that we talked about. If it swings down below 50K, then 47.7 to 45.5 are monthlies. So that would look like a wick down below the upper first. But you could see that these were far extended, right? Before the weeklies did that. So we're in a bit of a different look on things. So, I would extend out to the monthly and 2-month in this case, where, if Bitcoin does come down further, we're looking at a much longer form bull run, in my opinion, where we are probably looking at an extensive bull run into, 2025, probably a much longer corrective period, maybe a period of months. in terms of Bitcoin right now, and that's only if Bitcoin were to break down from right around that 53, break down below 58.8 and start retesting around 50 to 53. Then I'd be looking at things as being very much still bullish, but very much different in terms of my outlook on the quickness of this particular bull move. And of course, you get everybody triple top talk, and it's failing to see that it's not a triple top to a bear market, that it is literally a giant consolidation structure when you look at the longer term timeframes. You see the 2 month, the confluences for coming down further than the production cost basis are just not there either. This is something that I've mentioned. Caprioli talks about it around the halvings because that's when it's most important. But Charles Caprioli has talked about this, and he hasn't updated the indicator. I don't know if he ever will, to be quite honest. He makes probably a lot of money on his newsletters and stuff there, although they're free. So maybe I'm wrong on that. But the cost to produce a Bitcoin doubled after the halving, and it's around $29,900, $30,000 or so is what it was prior to the halving. Now that we have seen the halving and the rewards are halved for Bitcoin, that's doubled. So I mean, you're looking at 60K being the cost, the minimum cost to produce a Bitcoin relative to actual production cost, which is quite a bit higher. So that's something that I would just keep in mind. You don't see Bitcoin trade below production cost very much, which you get 100% increase, and then you've seen Bitcoin test the current production cost just prior to and on the halving, basically. It was on the halving for me because the halving occurred on the 19th into the 20th. Was the candle of the 20th. So just prior to the halving, it's basically tested production cost. So that's the lowest production cost. If this thing went down to like $33,000 at the lower second on the weekly, I highly doubt it. One, I don't think that's going to happen. That is such a deep discount on Bitcoin that if you aren't just like selling everything you own to get more Bitcoin, not financial advice, of course, then to get it at like literally half of production costs, like, you kidding me? What do you think miners are going to do? They're going to not sell. They're going to mine as hard as they can and maybe even purchase, right? Because it's just silly. And could you get Bitcoin? Could it? I mean, anything's possible, but I doubt it. I find it very difficult to believe, and I've shown you the case here. So for those of you that may not have seen some of this, I'll go to the index. So if you go to the index, this was the prior production cost. It was at 30,000. It is now 60,000. That is the lowest production cost for Bitcoin. And the only times in Bitcoin's history that you've ever seen this even hit production cost areas is in the bear markets, of course. So we saw a spike in a production cost. We got a difficulty adjustment down. We saw 5 to 6 closes below production cost. This was the actual macro low at $15,500. So we saw 1, 2, 3, 4. I'm sorry, 1, 2, 3, 4, 5, and 6 days that actually either closed or had a close open under production cost. In which case, if you weren't buying it like we were when we called that particular low, you're buying at a bit of a markup versus production cost. And in this case, we even saw it spike back into this. This was at $19,500. Why do you see it ticking up? Because of the difficulty adjustments. So production cost goes up as difficulty adjustments go up. So we did see this prior spike at around that $17,500 to $18,000 region. Now, if you come back to the prior cycle halving, right after the halving is typically when you'll see it kind of oscillate around production cost. Before this, in this case, we saw a difficulty adjustment down. We've only seen the difficulty adjust up at this point, but it's a great opportunity in this consolidation prior to the 2020 move up. When was the time before that it traded below? It didn't even close below. That was the 2020 dump off right to production costs. Yes, it dipped down severely below, but look at that. It got bought up within the same daily candle. So, that is to say that where's the time before that? Well, bear market lows, spike production costs. The first time, did it go lower? Yes, we also had a difficulty adjustment down, and then boom, it stayed above that particular production cost. Why aren't we seeing a difficulty adjustment down right now? Well, you can thank Casey Rodemar for that and Runes for that. You see the next the prior halvings here, coming into the actual the this is in 2016. So we had the halving, and Bitcoin traded below production costs for quite an extended period of time. Actually, this was the longest period that it traded below production costs, but it kind of flirted with production cost on the daily. So you had it step down with difficulty, and then as difficulty raised, so did price, and it kind of trailed it, regained it, spiked above it, spiked below it, spiked above it. Then we had a big difficulty adjustment down for this period, spiked into the zone, but stayed well above cost or the minimum cost. It was within cost, and then used that to go on the bull run into 2017. So, it's when Bitcoin is basically trading and or closing any kind of a candle below production cost, which you see it less and less over time as Bitcoin has matured and more miners are on the network, more nodes are on the network in general, validating transactions, stuff like that. Then guess what? I look at that as being a wonderful opportunity if it trades below there. And the further it trades below, the better the opportunity, because you're literally buying Bitcoin cheaper than it costs to produce it. So you're doing better than the miners. So that is the hill I'll die on as a miner. If I'm a mine, I mine Bitcoin, just so some of you know. I do have a nice rack that is running in a hosted center, and they are ASIC miners, and I mine Bitcoin and Bitcoin only there. And if I get the opportunity, I'm loading up on Bitcoin cheaper than I can mine it. And that's just, I also home mine, for those of you that already know this. Pleb mining, little pleb miners are pretty cool. Those little bit axes and some of the others are very, very neat. I personally am a big fan of, and I finally have, I believe, a ship date on the Apollo 2. I'll have to go double check. I thought I saw it. But the Apollo miners are really great from Future.io. Of course, I don't have any affiliations with anyone. I don't do any paid sponsorships or anything like that. This is pure opinion from using these things. And those are, you can join them to a pool, or you can lottery mine with them from home. There's also running a pure node and not a miner, where you can, you're contributing to the decentralization and security of the network. And also you can manage your wallets and stuff from your own node. You can have that interact with hardware wallets as well, which going forward, by the way, for the way things are looking here in the United States, you might want to just start moving things to cold storage, because they are going after any kind of service that, even Lightning providers. It's not just mixer services. So they're going after everybody. If you provide some kind of money transmitter license, by the way, they don't have a money transmitter license. That's why they're going after it. So they're calling Bitcoin money now. Interesting. Anyway, yeah. But the mixer services, obviously, I understand why they were going after them. But it's a little bit scary because they're overstepping on purpose. They're purposely overstepping it to encompass everything that they possibly can. So that is the dangers with that. Obviously, scammers like all the mixers, so they mix in with legitimate transactions, and now they're just declaring everything as an illegitimate transaction within those services when it's not. And then they're overstepping as far as they can go. They're like, here's the line, let's leap. That's what they're going to continue to do. So I do suggest that you run your own node, or you run, there's Sparrow, and there's Electrum, and there's all that kind of stuff. If you're going to go any of them, you go Sparrow, in my opinion. I would check the binaries, make sure that that it's the real wallet. And then, but then there's also, you can use in most cases, I don't see Ledger or Tezo or Treasure or any of those, I don't see any of those going away anytime soon. And if in any case, you can use open source wallets to interact with your hardware wallets anyway. And if you're running a node, obviously you can do that as well. Let me go ahead and look 6 times out of 7. So since 2021 top, technically even the second close below. Doesn't mean it has to do it again. Basis maybe lower first. Yeah. I mean, lower first, like I said, would put it at right at supports as it currently stands. And of course, the weekly will continue to move up as long as Bitcoin is trading above the basis. So, but it's all conditional. Monthly doesn't share confidence in me being below the upper second. I'm not worried about it. It just makes the upper first available. If it closes below the upper second. I mean, we could go into a deeper corrective phase, Bobby. I'm not. I've been warning of this, either or side of things. I mean, it is still a bullish consolidation on the daily here. So I'm not going to fade a consolidation until I see the consolidation resolve to the downside, right? It's got to meet those conditions to the downside, and then we start looking further down. He says he personally doesn't believe that we'll ever see prices below the 2024 open or the 2024 low. Yeah. I mean, when you're looking at the open of 2024 and the low, you're looking significantly further down, right? So the open was at that 43. On some exchanges on spot or index, it was around 42, 200 to 300. I could Bitcoin make its way down there, maybe in a deeper consolidation if things really got rough to the downside. Again, I'm really looking at this as a big macro consolidation. Even if Bitcoin takes off to the upside and hits like 100 to 130 or even more, I'm looking for a massive correction, and I'll get more into it if it does resolve this consolidation to the upside sooner rather than later, or this current consolidation to the upside in general. It's one of those situations where I think that we would see a big move up and then Bitcoin top, right? But everyone's going to call that the macro cycle high. And then it's going to go for it again later, much sooner than people think, much in the way that we saw 2021 resolve, right? Because you got to put in a higher low somewhere. And I do not believe that we're ever going to see Bitcoin down below $25,000 again, right? So on the monthly, that's my opinion. And just like everyone's, just like assholes, everyone's got them. I just don't see Bitcoin trading at literally half of its production cost. I just don't. And the way that things are changing on the back end with the mining scene, I just don't see that happening. It's such a low likelihood that if it was, it would be literally generational. You would need to hope that you were there and have available liquidity to purchase well below miner cost. Even with difficulty adjustments, you're just not going to be able to get Bitcoin that cheap for production. So we'd be buying at substantial discount below what miners can mine it for, and. That's one of those things of where, if we did see something like that, there's something else going on in the world, on the network itself, with miners, with regulations or something like that. That's the only way that I would see that. And it would most likely be extremely temporary and likely a very quick generational buy for you. Not financial advice, do your own research. That is so far away that it's not even worth talking about, to be realistic. But when looking at the monthly here, I mean, just throwing on a swing chart, where is, what's the most likely thing to happen, even if Bitcoin was to put in the top here, right? What's the most likely scenario? Is it, going to put in a top and then put in a lower low, right? Is that, if everyone thinks that that's the case, that it's going to put in a top and then it's going to put in a lower low, well, then the lower low's got to be all the way down here at $25,000 as it stands right now. So I do think that wherever it puts in a top, it is going to correct very hard, and it is going to put in a higher low, and it is going to go for either the top again, like it did back here in 2021, or it's going to go for a much bigger move to the upside after that. And that's where you would see like a nice bullish reset on monthly momentum. And of course, like I said, quarterly and 2 month are looking fine too. So that's where I think that many of the people that are mapping on traditional market liquidity cycles and saying that this, because of this, Bitcoin's going to do this. When, yes, it can have a big impact on what Bitcoin is doing, but Bitcoin is running its own cycles. It's running into its own clock, and it's going to begin to diverge more and more and more as time goes on. So year over year, it's going to keep diverging away from the traditional market forces. And in my opinion, it's going to become a force within traditional markets. Yeah, if you want to be really simple about it, I mean, look at where Bitcoin is. Let's go to the quarterly and monthly and look. Bitcoin is trading above the close opens from the prior cycle. It's literally just flirting with its high. It's flirting with the prior cycle high. Yes, it swung above it. It made a new all-time high. Last time that it flirted with the close opens, what did it do? It rejected in 2019. Of course, the setup was very different back then. What did it do when it approached this in higher low fashion on the monthly? We had 1 month and then the next month, and what did it do? It didn't even get to the high, swung it back down below it, but it was in a nice expansive posture and kept going. So, I mean, yeah, I'm not, yes, basically until 58.8 breaks down on a daily and higher term time frame close, I'm not interested in those downside targets, right? It has to be conditional. If I see that condition met, then we're looking much lower, right? That's what changes my mind in terms of my targets to the downside. Anyone that's telling anyone else that it's an inevitability that these things are going to happen is doing that for clout, or maybe they just don't know better. Maybe they think that they understand markets better than everyone else. I don't know. Whatever their motivations are for that. And even if you have a bias, you need to throw that out and start looking at conditional analysis. Whatever school of TA thought you are from, if you're not looking at things as conditions need to be met in order for XYZ to happen, then you cannot realistically look at any of these other areas of interest with a straight face and say that this is going to happen. You might be right, but you don't know. You don't know until you see the auction actually occur underneath that support. So you would have to see the auction, which, remember, this is an auction. It's bidders and there's bids and asks. This is a live auction 24/7 for Bitcoin, on spot, on derivatives, all the nine, right? So you would have to actually see it auction under that support at 58.8. And of course, that would meet the conditions of breaking down from the range and getting expansion on some of the higher term timeframes like the 2 and 3 day, right? And then that could potentially lead into a much more expansive move down into supports. That would be the criteria. And then on the flip side of that, I mean, just looking at the daily here, you can see where the basis band is. It's right at $65,000. If Bitcoin can auction above $65,000, then you have to observe it, right? Then we can look at 67 200, right? That's in play now. And then from there, above there, we're probably looking very quickly at Bitcoin reaching around $69,000 to $70,000 at minimum, in my personal opinion. Those are the most relevant areas of interest locally, and that is all conditional. It's not me prognosticating, it's me taking it level by level and understanding the way that order books and auctions work and describing that in reference to our charts and areas of interest on our charts. So, I'm not interested in even $56,000 and $57,000. If we see auction below 58, 8 and start getting into the meme pullback land, right, at 56 to 58, sure. That's our 20 to 22%. Bitcoin's been doing that. We can call it meme hit and up and away if it can regain 58.8 to 61,350 here. Again, conditional. You see the close open right there at 61,350 on the daily, right? So it all makes sense. There's nothing like crazy about the analysis. It's just understanding the way that price would have to react, what areas of interest it would have to regain if it was auctioning below and then hit some of those key areas or meme percentage numbers. It would have to rally back up and at least get above this last close open and that monthly, right? And then then we can go from there. If it was going to auction down below there, though, I would caution anyone. Probably, in my personal opinion, and this is where this is no longer technical analysis. My personal opinion is if it auctions below 58.8 for any period of time and fails to regain 61,350, we're looking at 53 to 50 because that's the biggest level of interest to the downside. And we saw the different confluences for volatility bands of interest in those areas and, the whole nine. So I'm not, and the other thing is it's always the most bearish before it's bullish, and it's always the most bullish before it turns bearish, right? Why? Because you get exhaustion of trend, you get exhaustion of volatility, and you get exhaustion of market participants. To the downside, you get exhaustion from the sellers, where the buyers just keep accumulating as the as the sellers or asks are hitting the bid, and then they run out of ammo, right? Same goes to the other side. But the nice thing about the bid side on any kind of a fiat traded pair is that technically speaking, there's an infinite amount of fiat, but there's only a finite number of Bitcoin, right? So over time, you have a finite asset that can be sold, that being Bitcoin, but an ever increasing supply of this other thing, that being fiat. Therefore, you have a black hole. It can be a fiat black hole. You can literally infinite bid Bitcoin with fiat. There is no end to the bid, but there is an end to the supply side. So that's the beauty of having a fixed supply. And, obviously there's the lost supply and like all that shit. I don't even consider that as relevant. But yeah, I like watching people freak out and be fearful. That's usually a good sign to look at my chart, look at that 12-hour, evaluate how the 12-hour could play into the daily, and then go from there. Beautiful expansion down, retest of the lower second, nice little range play to the upper second, back to the lower second. Love it. Love it. Get back above 64,300 or so. Probably looking at $65,000 pretty quickly, at least for a test. And then we come back to it, see if it can get a nice stoke turn, and then if that plays into the daily, so on and so forth. And then go from there. That's the setup I'm watching. But yeah, answering questions and talking to you guys, yes, has taken my time away from traditional market. I'm not really interested in traditional markets right now. I don't need to look at those charts to understand what's going on with Bitcoin. It's not going to give us any more edge than we already have. So yeah. We can take a look at it on Wednesday. I'll do a live stream on Wednesday as well. Yep. You can join me here, same place, same time, just about between 11 and 11:30 Pacific Standard Time. So If you're on the East Coast, you're looking at around 2 to 3, or 2 to 2:30 rather. So USD JPY. Yeah, I don't care about the news. I bet you. Hey, Bobby. I bet you, if we were to look at USD JPY, we could see that it was all on the chart before any kind of news hit. Right? That's always the case. It will always be the case. It will never be any different. That's commodities. And we know fiat is not a commodity. Ew. Gross. It's a nice little bounce, though. That's for sure. But yeah, this was expansion to the downside. Hit a nice bouncy area. Likely going to pick itself up off the floor here or try. Nice critical read on the daily. Yeah, so this was continuation after losing the lower second, getting that expansion down last week into this week. Nice spike into the lower second. Getting ready to turn too. Looking good. Look, this could very well lead to a low being set, at least temporarily, but it's going to have problems getting back to 0.0068. About 6.585. It's got beautiful resistance right there. Likely going to try for a low. I don't know what the news was, but this was telling you that it was going to go lower anyway. I mean, the breakdown on the daily occurred like last week. No, earlier this month, like the 10th into the 11th was the breakdown. So, whatever happened is likely going to. It was looking exhausted already. Probably a bearish bounce back up, but we'll see what happens from there. I don't know. I don't really pay attention to it. When you can do the inverse, you can do USD JPY. And you can see that see the same trend on the other side, looking ready to top out. That's a top signal right there. So paired against the Japanese yen. Obviously, when you see it trending down like that, you're going to see the inverse on the other side of that pair. When it's paired against the Japanese yen, you're going to see nice strength coming up, and then that looks like a top signal. At least temporarily or locally, but it is a very nice breakout, to be quite honest. So I wouldn't fade the actual breakout itself. Obviously, it's a weekly as well as like a monthly, I believe. I don't know, monthly could be a breakout. Yeah, could start to look a little bit like a breakout there. What the hell? Those aren't real, are they? Oh no, that's the swing chart. That's not real. Didn't literally go to zero back then, did it? No, it did not. That's a little bit of an anomaly that was registered in the charts. Maybe a one-off trade. But yeah. Well, the monthly closes above, what is this, 155.20? It's looking like it wants to get expansion, or at least keep testing higher over time, but it's not. It could come down easily as well. It just doesn't really. Dixie is strong right now. Weekly is looking fine. Daily might have put in a high, but it's in consolidation right now. So it's holding our areas of interest as support. Next big area to try and retest is right up here, 10, deeper 106 to 107, low 107 area. I did. I just did. I just looked at USD JPY. Yeah, you're probably running behind. I know, but it's the same thing. It's the same thing. It's all relative to Dixie right now. Dixie, big move down today. You're going to see the yen pair move up. So you can get the same looks looking from Dixie as well. This is a consolidation back to the basis, likely going to compress. The USD paired with JPY is strong, and it'd be a bullish retest, but that looks like a top on the daily, or JPY USD looks like it could be a nice daily low, at least to test up a little bit further. Could that correspond with Dixie heading down some more? Maybe. Maybe it comes down to the 104.5 to 105 region. The low 105 to upper 104 region. Could be. I just don't know. Nor do I really care at this moment. Is it going to have wider implications if the 2-day begins to break down and the 3-day begins to break down? Sure. If it loses the 2-day upper first, the thing is this looks like a daily consolidation more than anything else. And could it keel over? Sure. Yeah, it might. But like I said, we're looking at probably mid 104s to 105 as a basing point initially. Especially if we see 105 is going to be the basing point, in my opinion, if it does come down further to that upper 104 region, which just so happens to coincide with the lower first and the support here at 105. So, or the resistance, if you will. It did get back tested on the way up. If it does hold around 105.5, though, it probably looking at 107 over time. Bobby, I understand what you're saying. I do. Trust me, bud. It's not. It's literally JPY, USD JPY, even on longer term charts. It's just the inverse. I don't need the full history to understand what's going on. I don't need that. I get what you're saying, and I know what you're saying on the quarterly chart. I get it. But I don't need to look at it because it doesn't give me any more information. This is all paired against USD, right? So, I mean, it's a breakdown or a breakout on the daily, right? My opinion is that it could go back for a retest. In this case, on the JPY USD, it's likely to bearishly retest. If it can reclaim, great. Same thing on the other side for USD JPY. If it goes back for a bullish retest and then hits that area and finds it as support, then you're going to see probably much further downside for the yen. That would correspond with what, though? This is the more important point that you need to understand. That would correspond with Dixie, as it is traded against a basket of fiat currencies going up. And that's probably, more likely than not, to be quite honest. If you look at the monthly and quarterly on Dixie, this is a big consolidation. If Dixie breaks out above 107.5 or so, 107.35, we've got a range, but 110's on the table pretty quickly. And the monthly's looking strong. We've got the double dots here as well. This is DMI heading up, and the 2-month can turn on any close. It's getting close because it's going to close in a couple days here, right? But man, if it starts trading above 107, 107.35, this is, you're looking 110 to 112. Yeah, 110 to 112, upper second on the quarterly as well. And here's the kicker for those of you in forex trading. If Dixie completes across by the end of this next month's candle, so the end of May, above 103, you're going to see a shift in the macro for momentum. And if it starts trading, then of course above 107, we're looking at Dixie just like going, like it's going to go for its highs, more likely than not, as this would be a bullish reset on the quarterly. What does that mean for Bitcoin and other things like it? Well, one, if you're trading any kind of forex pair against Dixie, you're going to get absolutely trashed if you're trading against Dixie and not with it. And it would probably coincide with what I've been talking about with Bitcoin. If Bitcoin breaks out to the upside in the more near term, resolves this consolidation to the upside, then we're looking at probably a quicker top than many people expected, and then a longer form consolidation that many are probably going to look at and be like, oh, well, this is the bear market, it's here. And then it does some sort of higher low fashion move, and then retests the highs, possibly higher from there later, and really catch people off guard, much like it did in 2021. That reaccumulation, Wyckoff reaccumulation, really screwed with a lot of people's heads in 2021. Like it did not go parabolic the way that they expected it to. It did not do what they expected it to at the supports and break down further. And then it went for a double top, and everyone was like, "No, this is now the run," and it double topped, right? And we were cognizant of all these things while they were happening, and one of the main things that we were looking at was a Wyckoff reaccumulation on the daily, and nailed that pretty much perfectly, and then went up to make those new all-time highs. Now 70 to 72 did not get hit, but we pulled up just prior to that while making a new all-time high. So we were not necessarily correct on the wick, but we got close to our zone at around that 70 to 72 at the time, and it just so happens that Bitcoin's been playing in that same area again. I really am of the opinion that Bitcoin is in a long-term macro sideways and up consolidation that's going to resolve over the course of many years with massive upside implications against all fiat currencies. But Dixie is threatening. And it's not immediate, but Dixie is threatening. And that would likely coincide. Dixie pulling back here probably bodes well rather for the yen to at least go up and bearishly retest. If it can regain some ground, sure, then you're in for a longer form consolidation on Dixie, and I would not be looking for those macro breakdowns in Dixie anytime soon, considering the way that the monthly and quarterly are starting to look, to be quite honest. But we'll monitor that as we head into May, and then of course May into June, and then come back to it, of course. So that is going to do it for me today. But I do understand completely what you're saying, Bobby. I understand that you also wanted me to show how perfect price action plays with that stuff. I get it, buddy. It's just that I think the point is the point I wanted to make is a little bit more important than the perfection on the charts at this point, because I do want you to understand how this all fits into Bitcoin as well. Even a pair like USD JPY or JPY USD, however you want to pair those two. It is an interesting chart, and I do appreciate that you brought it up. But more importantly is going to be what Dixie does here, and it will have its influence on Bitcoin, of course, right? Stronger dollar, is going to be able to buy you more Bitcoin, because Bitcoin would be a lower price relative, right? So, but as it stands right now, Bitcoin not doing anything too crazy, not anything unexpected, all things that we've talked about. So keep it conditional. Don't get too far ahead of yourselves, whether you're bearish or bullish. And typically when you start hearing the bears scream about we got this on lock, but yet they've had like 10, 15 chances at the bottom here, it seems. When you start to see that 12-hour and daily turn, that's when I think it's going to be lights out for those bears. been a nice short position from the highs after the breakdown from 69K, the failure at 72 or 67 rather. But the top side was a failure around that 72 to 73 with the breakdown below 69. Beautiful short. Back to supports at 65 and 61 350 and below. Got to be another beautiful short. I mean, this has been a daily downtrend on those lower turn time frames for more than a week now. We did have one candle in between, but we're looking at 23rd to the 29th, basically a week. So beautiful short positions there. It's been more bias short, but that picture could begin to change over the next 12 to 24 hours, maybe 36 to 48 if we don't see it starting to change within 36 to 48, then maybe we have to reevaluate those lows. But that's going to be it for me today. You have a wonderful morning, afternoon, and evening, no matter where you are in the world. Please trade safe. And of course, as always, stay safe. And I will come back at you tomorrow after the close of the Tuesday candle, which should be the end of the month, correct? I just want to make sure it's the 30th is the end of the month, right? Yes, it is. So that it will be recorded on Tuesday, but it will be the Wednesday candle because it will be after close, 5 p.m. my time, Pacific Standard Time. So we'll evaluate the monthly close in a recorded video. I will stream that video to X only while it is uploading to X and YouTube. That recorded video then will be available as soon as the stream ends and it is processed. On Wednesday, I will be back around the same time as I was today to do a live stream and evaluate those things that we talked about in that recorded video and follow up with some of the things that we talked about today. Maybe even get on that JPY or USD JPY chart that Bobby wants me to look at because I know that he sent it to me in Discord. So even if it's, it might be a nice teaching tool for some of you as well. All right. You have a wonderful morning, afternoon, and evening, as I said. No matter where you are in the world, please trade safe, stay safe. With all that said, Landy out for the second time. Later.